It was a solid result, and obviously you would have seen it with the share price reaction yesterday. But when you dig through it, I guess different aspects of the result were pleasing, while some others were just more in line. So definitely underlying NPAT was a big beat, but when you dig into it, it was really driven mostly by DNA being lower, which was only lower because they did level a $500 million impairment against their legacy iron ore assets. So that's all good and well. But it doesn't really knock your socks off. But where they did really impress was certainly on operating cash flow, and so free cash flow, sorry, and also net debt. So this is important as it helps the market, hopefully some of the bears in the market to I guess gain some sort of confidence around the capital resources in the business. I think that's critical because when on the result call, Chris Ellison, went to great pains to explain that, operating this business for 31 years, he started with 10 grand in the account. He's always managed it from a capital resources basis. So always making sure that the company was never pushed to its limit, and exposed to potential commodity risk that could break the balance sheet. So I think this is very reminiscent of Santos a couple of years ago, where analysts were criticizing it, saying its balance sheet stretched. We're really ignoring the fact that Santos, much like Min Resources, had total control over its key growth projects and could phase capex if a low case in commodities emerged. So that's definitely what Chris Ellison's talking about, saying that they would take action if prices unexpectedly plunged, and would reinforce their balance sheet. So with their own internal cash flow. So I'm very confident with their long track record that they won't compromise on capital discipline and will keep their balance sheet protected. In the meantime, the extra cash flow, in addition to the upcoming payment from Albemarle on that Kemerton sell down, has given them confidence to flex the dividend, something that, given the confidence in their balance sheet, I thought they might do, but certainly a surprise consensus. So, I think, ultimately it's a strong result. Puts a higher baseline under the numbers for the bears in the market, but probably doesn't change their view until we start to get those better numbers coming out of their operations in terms of costs and EBITDA. And that will be driven by, in lithium, which is by far their biggest division by earnings basis, getting through. They're doing pre-strips on to support the expansions that they've now put through for both Wodgina and Mount Marion. Their two lithium operations. So once they remove all of that dirt, they can access the ore, enough ore to feed into their expanded plants to support more lithium output. Hopefully that makes sense. But in the meantime, moving that extra dirt, it does come at added cost. So he was saying, Chris Ellison was saying that the majority of those costs are in the first half of FY24, and really by the time we get to this time next year, they'll be into heavy profit generation from their lithium business, well and above what we're seeing now. In the iron ore business, it's all about managing the late life assets that they've got in the Yilgarn and Utah hubs. Hopefully Utah gets a benefit from the new Onslow project, which will be online in calendar 24. So once that bigger, long life, low cost operation comes online with rail and a new berth supporting it, that'll benefit their Utah operation as well, which will then hopefully make tens of dollars per ton saving in terms of transport costs. So overall a good result, better than in cash flow terms than we in consensus thought. Good dividend, which helps to improve the view of the market on the confidence of the company. No move in how focused they are on their overarching strategy, which has been another criticism from some of the bears. And, it's been a bad quarter for commodities in general, and that top-down fears around China data, which is still pretty ugly. And that, that's definitely lent on Min's share price. But I'm still maintaining my confidence in the stock and think that if you can hold it into FY25, it'll be a totally different business in terms of the kinds of numbers it's generating. So maintain our buy rating.